South Africans have been given a much-needed income tax relief. Government has opted not to increase personal income taxes on fears a further increment will harm the economy's recovery. Treasury has noted that it has announced large tax increases over the last 5 years. However, this has done little to close the widening tax revenue collection shortfall, largely due to subdued growth. As a result, government has introduced above-inflation increases in the different tax brackets, meaning South Africans could pay less taxes. Government has also increased the tax-free threshold from 79,000 Rand to 83,100 Rand.
To support growth, therefore, we propose no major tax increases. I don't know where people who talked about VAT increase got that from. Indeed, there is some real personal income relief. This budget means that a teacher who earns on average 460,000 Rand a year will see their taxes reduced by nearly 3,400 Rand a year.
While economists expected the value-added tax to increase by 1 percentage point, Treasury has left it unchanged at 15%. The general fuel levy will increase by 16 cents per litre, while the road accident fund levy will increase by 9 cents per litre come the 1st of April. Sin taxes are also set to increase. A box of 20 cigarettes will go up by 74 cents. Spirits by R2.89 per 750ml bottle, and malt beer by 8 cents per 340ml can. The carbon tax will also go up from 120 Rand to 127 Rand per tonne.
Yeah, so I think because no significant new taxes have been introduced and the minister's given some compensation for fiscal drag, that's, which is inflation, that's a big relief for the average household who will have more money in their pockets to spend. And I think that does help in terms of helping to stimulate the economy.
The tax revenue shortfall currently sits at 63 billion Rand, significantly higher than the proposed 52 billion Rand in the medium-term budget policy statement. This is in part due to the rising unemployment rate and weak economic growth. However, government is hopeful that collections will improve as it continues with efforts to rebuild SARS.
We know we are underperforming, but tax revenue comes from three driving forces. The first is, in any given economy, there's tax policy. That's the level of tax that you pay, whether you're VAT or CIT or PIT or any of the other taxes. The second is the level of compliance in society. And the third is the capability of SARS to administer the laws. Now, one would be tempted every time when you need more revenue to raise taxes. But the more money we take out of the system, it in fact then begins to reverse the impact on the economy.
Government has also outlined plans to reduce the corporate income tax from 28% to attract investment and revive the economy. Mbalenhle Mthethwa, SABC News, Parliament.